Good morning, Jags. This is Fahad. Today is Wednesday, October 28th. Let's get started. Uh, I was struggling coming in this morning. Do I want to be a bearer of good news or bad news? Because I got to balance this market out. Dow futures are down 490 points as I'm making this podcast. Nasdaq futures down 151 points. S&P futures down 50. And Russell 2000 is getting beaten up the most, down nearly 2% or 31 points. Just a very, very ugly start for the market looking at these equity futures, and nothing is working. Crude oil is down 4.5% now with a 37 handle. Gold futures are not working either. Gold is down 1.3% or $25, and even Bitcoin is getting beaten up. Bitcoin is down 3% or $420. Or you can look at even other commodities. Copper futures. Copper futures are down too, 1.5% almost. And if you look at when this entire selling began, all you have to do is just look at the S&P futures chart. As soon as the market closed yesterday, I noticed this before I even left my desk last night after closing out the chat room. But as soon as the market closed yesterday, the S&P was already falling in the extended market session. It was already taking out the market lows from yesterday. And then we bounced back around for a little bit until the European market opened. And the European market opened at 3 o'clock, and immediately the S&P futures started to sell off once again. And we have not seen any recovery since then. We're sitting near the session lows. All major indices are sitting near the session lows. And if you look at Dow futures, same exact picture over there too. And so my question is that we're going to open down nearly 500 points. So should we prepare for a minus or a down 1,000 point today? Because this is very, very ugly start of the market, right? And that's what it comes down to. Now, I shared two stories in Telegram last night. One was this, which was France is mulling a month-long national lockdown to combat COVID-19 crisis. There is a national televised address that is expected from the Prime Minister Macron sometime today. I believe it's at 7 p.m. GMT, in which he is widely expected to announce that. And then similarly, Merkel, which is right over here by Daily Mail, also reported that Merkel is announcing what is called a limited shutdown, basically closing out a lot of the recreational stuff, but keeping the schools open. France is much more aggressive, closing down every single thing. We also learned 2 weeks ago the UK went through the same phase where the UK shut down pretty much the entire northern London and many other parts. So they might as well just be moving towards a complete nationwide lockdown pretty soon. Spain is announcing similar kind of measures along with other countries. The entire Europe is going dark. And the thing is that we can sit here and we can talk about Italy is doing exactly the same thing. We can sit here and we can talk about how this is, maybe potentially just a European problem, maybe not the US, but I don't know if I'm going to make that determination anytime soon, because if you look at the coronavirus tracker in New York Times for the United States, it is not looking any pretty either. Now, I understand that the president does not want to shut down, but what if we get Biden victory on Tuesday next week, and then he proceeds following along what we are seeing in Europe with similar kind of top-down lockdown measures across the entire country? That's what this market is dealing with. Now, that's the negative news that basically, what we're looking at. The Dow minus 500 points. Are we going to have a minus 1,000 point day or not? But on the positive side of things, there is a couple of things that you need to keep in mind, which is market internals. If I look at if you look at the market internals, you will see that here is the chart of NYSE, and here's a chart of NYMO. These things matter because they tell us a story. NYMO closed yesterday at minus 45, right? And as many times as I've said that whenever it gets to minus 80 or plus 80, that's an extreme reading, and we can see a reversal in the market, a snap back in the other direction. With the market opening down as much as it is today and potentially selling off more during the day, we're going to get to minus 80 reading in NYMO today. Right at the open, we're going to have NYMO oversold pretty much, or within the first 1 to 2 hours of trading. That's an oversold reading for NYMO. But on the other hand, if we do see a bounce back, understand that in terms of a momentum, NYSE is coming down now sharply, in similar the same way as we saw the last break, which happened on September 2nd, which prompted me to send out that market breadth email to all clients, in which I said, go to, it's a little bit of a risk-off moment coming in front of us, and we ended up getting a complete 15% correction in Nasdaq in less than 2 weeks. We have that moment in front of us. This time Nasdaq is outperforming, and Russell 2000 index is selling off, is the one that's leading to downside precisely because of COVID-19 infections. The point here is that you're going to get a snapback, in my view, because we will be oversold today. If not today, then first thing tomorrow. So you're going to get a snapback. But the question is whether it will last long or not. Now, understand that this snapback may potentially come just in time when tomorrow being Thursday, after market close, we're going to get plethora of all these large cap tech companies earnings reports. So Google, Facebook, Amazon, they all report earnings tomorrow after market close. And so they may, and they're going to be posting some very, very good quarters because they have been big beneficiaries of COVID environment. So maybe, and right then the S&P as well as these NYMO indicators will be oversold. And then on top of that, and again, this is not a political statement, I'm simply trying to look at exactly how things may play out. On top of that, if we do get, NYMO oversold going into an election, which is next week on Tuesday, and if we find out, given that the polls are correct and the betting patterns are correct and all of this, and if Biden ends up eking out a victory, right, we may then have a situation of a sharp V-shaped recovery in the Russell 2000 index of small and medium-sized businesses, precisely because everybody will then be focusing on a large fiscal stimulus from the House and the Senate and the White House that will proceed very, very quickly. Now you may wonder that, yes, but does it really help if Biden is basically throwing the entire country back into lockdowns? Yes, it does still help, because if we learned one thing this year, which is that when things were shut down in April, the monetary fiscal stimulus from Federal Reserve really, really helped in terms of the equity prices. You could see something similar happen in the month of November if Biden ekes out a victory. If not, then it's a completely different ball game, and then we're going to have to reevaluate differently if Trump wins. But the point here is this: we are going to be oversold. This market is going to be very, very weak today. It's going to be one hell of an ugly day. Nothing will be green on your screen today. Everything is going to be down and potentially get even worse as the day progresses. But we're going to be oversold today or first thing tomorrow, going into heavy tech earnings report tomorrow after market close. Now, with that said, one stock I want to quickly touch upon is GRMN. A couple of weeks ago, I presented a bull case for GRMN in webinar, and you guys can go and pull up that note. It was about 2 to 3 weeks ago. I can't remember exactly what date. This company has posted earnings this morning and is absolutely blowout quarter. So in the sea of red, when everything is going to be gapping down sharply, GRMN already pre-market after closing around 98.60. It is gapping higher to $102 per share. And what does that mean? That means that if you look at this chart closely, this is a breakout, because $100 has been resistance, and the high earlier this week was just about $101, and the stock is trading about 102. So it's going to open with a breakout, and that opens the door all the way back to new 52-week high. If this market is oversold deep enough right in the first 1 to 2 hours of session, to the point that we start to see some buying come in, particularly in tech stocks where they have been beneficiary of COVID trends, rising COVID trends, there's a reason to believe that not only after gapping higher, this could become a gap and go stock. A common term that's used when something produces a very strong quarter, it gaps higher small first, 2 to 3%, and then runs after that. So gap and go kind of stock, considering that the market internals will be oversold at the open. So watch this, GRMN, will gap higher, but this may continue to run sharply. I would like to point out how strong this quarter was, though. This company posted this morning Q3 revenues of 1.1 billion versus a street estimate of 892 million. I mean, consider how big that is. The highest street estimate on the revenue side was 928 million, and the company posted 1.1 billion. So about 15% above the highest estimate on the street. The top line revenue growth was up 19% year over year. Gross margins and the operating margins skyrocketed because of economies of scale. The EPS, earnings per share, was $1.58 versus a street estimate of $1. That's a 58% beat. And for the fiscal year 2020, company guided pro forma EPS of $4.70 versus $4.13, a street estimate. The highest street estimate for the full year 2020 EPS was $4.48 when the company guided $4.70. Similarly, on the revenue side, they're guiding $4 billion in revenues versus a street at 3.73. Marine is contributing significantly, which was up double digit. Fitness was up double digit. Outdoor was up double digit. Only aviation was down a little bit, right? But everything else was very, very strong. And gross margins held up sharply. And this despite the fact that the company actually continues to carry a rather pretty high income tax rate on its balance sheet. So very strong quarter, particularly the outdoor segment. If you break down the revenues, 334 million versus 250 million. So if this market stabilizes, I think GRMN now is going to push towards new 52-week high, which means all the way to 105 to 110. Watch this stock. There might be some ways to make money on this today, depending on the market conditions. And that's it from me. Jay?
Morning, everyone. So today I just want to give a quick preview for earnings in symbol BOOT, Boot Barn Holdings. So for those that do not know, this is a specialty retailer who sells Western and work-related footwear, along with apparel and accessories. Now, 51% of sales do come from footwear. And before talking about recent checks, we can look at the earnings report yesterday after the close from a company called Rocky Brands, which is symbol RCKY. And I did post some commentary in First Read today under notable callouts. Some of that commentary includes management, Rocky Brands management, talking about how work, their largest category, was up 20% in the quarter, and that was led by Georgia Boot, as this collection performed very well at key retailers like Tractor Supply, Boot Barn, as well as some smaller independent companies. Meanwhile, their Western category, they said that this experienced a dramatic turnaround from the second quarter, increasing 27% year over year. Now, let's go back to Boot Barn. When you break the footwear down, Western sales represent 70% of the company, while work represents 30% of the company. So you have positive read-throughs to these two segments. Now, looking at specific channel checks, Cowan was out. Actually, it was, to begin with, they were out about a week and a half after Boot Barn's last earnings report, talking with the CEO and how the company is acquiring new shoppers and seeing success across new markets during this whole pandemic. They were then out again this past week. They actually raised their price target to a street high $37, and they were modeling comp sales at down 7.5%, which is actually ahead of the street at 7.8%. Their survey that they had done pointed to stabilizing trends and compelling private brand momentum. JP Morgan, also out this past week, analyst Matt Boss raised his price target to 35. He's actually modeling comp sales at minus 6.1%, which is technically better than Cowan's as well as the street. He talks about his recent field work pointing to comps sequentially improving from the minus 13% August week 1 trend that Boot Barn reported on August 4th. He noted notable correlation between the improved COVID-19 sentiment and store traffic following the peak July flare-ups in both the state of Texas and California, which do collectively represent 42% of store exposure. And this correlates to the CDC rolling 7-day average case counts sequentially improving month over month from July peaks, with August down 18% and September down 40%. In terms of e-commerce, his fieldwork showed that there was no moderation from July and August growth. He pointed to similar web data showing that the September trends were more or less equal to August. So with positive read-through from Rocky Brands, as well as relatively positive channel checks, ultimately this should post a good quarter. The only question mark will be in terms of guidance, because we have started to see the uptick in COVID cases. Will that factor into forward guidance? But we will have to wait until after the close today to find out.
Yeah, this has been quite a few times in and out our favorite, right? Because it seems to come out with some very strong channel checks and tends to bounce back rather very quickly. We've covered this a couple different times, Jay. Interesting update on this one, particularly the read-through that was covered in the first read this morning from Rocky. And there's a setup here too. If this has been relatively quite strong, hasn't been responding to market sell-off. This is trying to tell us something. If you look at closely, purely technically, this recent surge that happened in the early part, in the first 2 weeks of October, this was on rather elevated volume. And then yesterday, there was also a pickup in some volume as well. So the stock has been showing relative strength there. And lastly, I'll point out that this $33.80, call it $34 VOP resistance level, if it clears that and breaks out from this bull flag, you don't really have minor resistance around 38, but you really don't have any resistance going all the way to 41. So, that's a lot of ground to cover on a percentage basis. This would equate to, I don't think this will get there in a single heartbeat, but that's like 30% potential ground to cover to the upside. Interesting one. We'll be watching closely, see if we see any pickup in call option activity as well. Good stuff. Chronicle.
Morning, Fahad. Quick update on Celanese post-earnings, symbol CE. So on Sunday, Celanese reported Q3 EPS beat of $1.95 versus $1.71 consensus, and revenue of $1.41 billion versus $1.34 estimate, representing 18% sequential improvement over Q2. But the stock reacted downward because the Q4 guidance that the company provided was very conservative. Like, they guided to EPS of $1.51 at midpoint versus $1.69 consensus. And looking at the conference call, it looks like management deliberately kept their guidance low because of uncertainty surrounding COVID. And they said that this guidance is going to be the floor scenario. And then after Q4, they're guiding to 2021 EPS of at least $8.35 versus $7.05 for this year. So basically, management is expecting to see 18% earnings growth in 2021, even though the immediate Q4 guidance looks cautious. They're also committed to executing between 400 to 500 million of buybacks next year, which, according to my rough math, should contribute to roughly about 20 to 25 cents of upside. Now, looking at KeyBank's note, their analyst is arguing that this Q4 guidance is way too conservative. In fact, he thinks that the eventual Q4 EPS number is going to come in 12% higher than what they've just guided, and a couple reasons for this. First of all, management appears to have deliberately left out better than usual seasonality. In both the conference call and press release, management said that they foresee strong orders and restocking in autos and electronics at least through November. And then the other thing that the Q4 guidance has left out is the fact that IHS Markit has been reporting improving margins lately in both acetic acid and vinyl acetate monomer. On top of that, IHS is also seeing very healthy demand as well as tightening markets in the US and Asia, which, if we recall, has led Celanese to raise prices in recent weeks. That's also been omitted from the guidance. And despite the coronavirus surge globally, manufacturing isn't getting shut down for the most part. Therefore, to summarize, Q4 is not going to be as bad as guided. And then 2021 is going to have high teens percentage earnings growth. So this pullback after earnings was just a reaction to the headline immediate outlook being conservative. And looking at the chart, the upward trend line still since April is still intact. We've been bullish for a couple months now, and so I think we can let it settle down for a bit from all the volatility, and then after that might be a good spot to add. With PE around 20, it's not all that expensive compared to say Huntsman, which is trading at over 40 times, and it's good that earnings are now out of the way.
Yeah, so, typically in situations like this, when we take a constructive view after reviewing the quarter for some of our favorite names, we just wait until the technical signal is here for a re-entry or to add to the position. In this case, that's precisely that, where the stock was at 120 on Monday, and here we are now at 112, and with the market gapping down sharply, it's probably going to be slightly below 110, maybe even 107, 108, basically just tacking on to this trend support once again. There's a lot of VOP congestion also around this area between 105 and 110. So I think the easiest thing to do is to let it settle in, as you said, right around this area, and then look for some hammer reversal or basically reversal candle of any kind, and any potential pickup in option activity to step in and look for the next leg higher at that point that can carry the momentum back to 120 to 125 level. So purely as a swing long entry, but we will wait until this thing settle down. But nice to know what the fundamental backdrop is with everything that you discussed. So fantastic stuff. All right, folks, we're going to stop over here. Jags, we will see you in the chat room shortly.